Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Peggy Martin. Peggy is a certified life underwriter and a chartered financial consultant, and she is a financial planner with the Family Wealth Consulting Group. Peggy also is an independent, commission-based insurance broker offering a range of insurance products, including life insurance. So today, Peggy and I are going to talk about life insurance basics. And we think there's a lot of confusion in this area, a lot of maybe misinformation, and so we want to get some facts out to try to help people out. Peggy, thanks so much for joining me today.
Mike, it's a pleasure to be here.
Okay. So Peggy, why is life insurance an important component of the financial planning picture?
Well, anytime you care about your family, care about possibly a business that you're running, maybe care about your community, life insurance is an integral part of the financial planning process. It's a risk management tool. Mm-hmm. I have, in my career, paid out about $25 million worth of death benefit. Sometimes it goes to families, sometimes it goes to companies, and on occasion it has gone to charitable organizations, community causes. And not that having a death is rewarding, but knowing that you have helped a family survive through a very difficult time frame. Death is a very emotional process for all of us.
Yes.
To have a loved one die, but to know that you have financial security, or at least a start to financial security, because you have life insurance in place and that your family can continue to move forward or your business can continue to move forward, is rewarding when I get to see that happen. Mm-hmm. And I think that life insurance is a wonderful gift if you love somebody or if you want your business to continue. Mm-hmm. It's a great way to help to protect that. It definitely is a great risk management tool.
Okay. So what are some of the problem areas that life insurance can help people solve, and how does it do that?
Well, again, as we've talked about, death always comes unexpectedly. Even if we know someone is seriously ill, it still comes unexpectedly. And if you're a young family in particular, but even if you're a family where you have children that are still in college, how do you continue to fund that? How do you continue to fund the lifestyle that you had? Without some kind of life insurance, it is I don't know anything like it that can prepare a family or a business to continue and move forward.
Right. So let's cover some. So one, of course, is unexpected death of the family breadwinner.
Right.
And even these days, I mean, both people are maybe the breadwinners.
That is true.
And so suddenly, though, you've got this major adjustment that you have to make because this income has stopped. And like you said, you may have a mortgage payment that needs to be made that you've been depending on both of your income, education expenses that need to be paid for children and so forth. So by having this fund that is available, an infusion of cash, if you will, that can be then reinvested or otherwise amortized, at least you can make an adjustment, if nothing else.
Correct.
After the death of one of the breadwinners.
Well, traditionally what I've done when there are two breadwinners, or even if there's just one breadwinner, I think the non-breadwinner person is doing a lot to keep and maintain the family.
Right.
And that has an expense to it. And what would the breadwinner do if the non-breadwinner was no longer able or had died?
Yeah, maybe they need a nanny or something.
So that all needs to be taken into consideration. So when you're doing a holistic financial plan, all of those things are looked at. What kind of insurance is needed, and how should that insurance be titled? Who should own the policy?
Right.
And who should be the beneficiary of the policy?
Right. We may talk a little bit more detail on that a little later. We'll see how things go. What about business continuity? So probably a lot of businesses never even think about needing life insurance for a business.
Years ago, I had two consecutive business owners, two different businesses, but I say consecutive because it happened like 1 month apart, where there was key person life insurance in place, and there were buy-sell agreements in place, and there was buyout insurance in place. And both of those companies were able to continue to survive after the death of one of the partners. And it was able to happen that way because the life insurance was there. A new employee was hired to step in and be trained. But additionally, the planning was such that not only did we have the key person coverage that went directly back to the company was the beneficiary. The buy-sell went to the family,
Right.
basically. But on top of that, we had put a little bit of insurance in place that went directly to the family that had no strings with the company at all.
Mm-hmm.
And it ended up being one of those, again, rewarding times where, yes, this tragic event had taken place, but the family was able to continue and the business did survive. And I had two of those right in a row where, again, it was just kind of a life shock back to me that, yes, indeed, life insurance is something you want to make sure is in everybody's financial plan.
Right. So this idea of having a buy-sell, I mean, I think it's just so essential. It goes all the way back to Benjamin Franklin, I know of, and maybe there were even people before that, but they said, when you start the thing is a good time to talk about how you're going to end it. And
put
a plan in place.
I think the phraseology, and I believe I read it in a Stephen Covey book, begin with the end in mind.
Yeah.
It can come into play in so many aspects of your life, and definitely doing planning is part of that.
Right. And so when one of the if you've got a partnership, okay, so obviously things get more spread out when you have a public company. So that's another thing. But when you have these more closely held operations,
correct,
and somebody's no longer there, now you've got another dynamic because the survivors have to deal with the family, and there can be a lot of hard feelings and other things. So if there's a way that you can settle it out that's been prearranged, it's just going to make life so much easier for everybody.
It does, and it does work too. If the documentation is in place, and I'm a firm believer of communication, especially with small businesses, whether or not they're family owned or not. With small businesses, I think it is critical that communication take place of what plan is there, so that the spouses of the partners know what is going on and what is to be expected of them if in the event of a disability takes place or a death takes place.
Okay. Now, an item that used to be a big concern was funding estate taxes, but now we have, for a husband and wife, effectively about a $10 million exclusion.
Correct.
So for most families, that's not going to be so much of an issue as it has been in the past. It may be for some families that have more significant assets, especially if they're illiquid assets.
Right, exactly. And we have worked with a number of families where we did do estate planning work with them in conjunction with their estate planning attorneys, and we're able to put in life insurance that did actually help protect the estate from the estate taxation. And it does work. And again, in our environment today, for the families that we're typically working with in our group, we may not run across the estate planning from a estate liquidity need so much for the life insurance, but it definitely is something when you're working with higher net worth folks, you want to make sure that you're taking a look at that.
Right. And but, you and I are a little spoiled. In California, we don't have an estate tax.
Right.
But in other states, and some people may be watching this that do live in other states, they still have inheritance taxes or estate taxes, and their thresholds may be much lower, and so they may actually need to be looking at that and talking to their attorney related to that.
Correct.
Another thing has to do with final expenses, and so maybe you could talk about that for a minute.
Well, life insurance has historically been used to help with final expenses. And in today's world, there are actually some companies that specialize in doing nothing but the smaller policies to help pay for final expenses. And it's not inexpensive. If you do a traditional burial, potentially you're looking at $25,000 to $50,000 to take care of what you want to take care of for your loved one. So yeah, it is a way to help pay for that. Bigger need, though, is to take care of surviving spouse, surviving children, and the business.
But there might be things like, final medical expenses
There
that
could
could
be.
be significant.
There
or
could be.
There could be other debts that need to be dealt with. Sometimes some debts may actually, in a sense, be called because, again, if the breadwinner is no longer there,
Right.
they want to know how they're going to be paid.
Exactly. Yeah.
So,
yeah. And they want to be paid like as soon as they can be paid. Yeah. Yeah.
So really, there needs to be sort of a needs analysis to determine, really how much life insurance that you need. Although I think once the benefits are paid, that's not really in the forefront of the minds of the people that are getting the benefits.
This is the difficult part of any planning process. Yes, when you do the holistic financial planning process, there is a capital needs analysis that can be done. And that gives a benchmark on how much life insurance might be needed. And I say might be because every situation is different until you're looking at all the facts. There could be a special needs child. There could be a whole bunch of other issues going on with the family. After the death benefit is actually received by the family or business, what they actually do with it becomes a bit of a challenge from the advisor's perspective. Years ago, the advisor was actually able to deliver a death benefit check to the beneficiary. It doesn't so much work that way anymore, or at least that's been my experience, that the insurance companies are dealing more and more directly with the beneficiaries. Typically, they're sending them a checkbook rather than a check, just a check. So it's a different world now. So being proactive with your client, I have had beneficiaries reject talking to me.
Really?
They do not want to talk to me. The money, one woman in particular was very upset, naturally, at the death of her spouse. However, just did not want to think of the money as something that she received because of his death.
Well, and part of it is what I have found myself is quite often, again, you've dealt with somebody as your client during the person's lifetime, and the mindset of the survivors and working with you is just not the same. You just don't, you don't have the same relationship, or even something clicks in their head or something, and so they go in a different direction. So
especially, I find that to be true when it's a second generation, is that a lot of times the second generation, or possibly third generation, does not want to work with the advisors of the first generation. They want to pick their own people to work with.
Right. So maybe we can just summarize. Why is life insurance a great tool for solving the problems that we were talking about?
Well, typically, life insurance is the only thing that I know that if it's structured correctly, which it's hard to get it structured so that it is not, so that it is taxable to you, income taxable to you. So it's an income tax-free infusion of cash. It may be estate taxable depending upon, again, how the policy's titled, but it's lump sum cash that you're getting. And, if you have a $100,000 policy, you're getting $100,000. If you've got $1 million, you're getting $1 million of cash coming to you that can fund your income replacement, can fund the business continuity, can help with estate liquidity.
Okay. Can life insurance be taxable?
Well, it definitely can be estate taxable, but the bigger issue is, can it be income taxable? And you have to work at making it income taxable. There's a rule called transfer for value, which is a pretty complex rule, but you have to be careful on how you transfer ownership of a policy once it's in place. And you need to be working with the appropriate advisors to find out if you indeed can make this transfer. A simple example could be when a policy is corporate owned and you have a buy-sell agreement. That is a redemption corporate buy-sell agreement.
Yes.
And you want to change your agreement to a buy-sell agreement, a cross-owned buy-sell agreement. You cannot transfer a corporate-owned policy to a shareholder. That is called transfer for value, and that would subject the benefits, the death benefits, to being income taxable. My advice is if you're making any kind of ownership change, check with your insurance agent, and if you have an estate planning attorney, check with them.
Right.
And make sure you're doing it correctly.
Now, there's some people that are actually buying policies like on the marketplace where people are transferring their policies. And that's a little bit like gambling. That's also transfer for value, right?
Well, actually, it depends on how that's set up.
Mhm.
I have had limited experience with that,
Mhm.
but because there's actually a physical buying of the policy, that it doesn't necessarily constitute a transfer for value. What happens, or what could happen, is the purchase price is taxable to the insured or the owner of the existing policy.
Mhm.
So it's an area that I have had limited experience in, and so I'm definitely not an expert at that, and it's not something I typically look for.
Okay. I've also seen some cases where people have borrowed out the cash, taking these cash value loans, and then the policy lapses, and suddenly they got a taxable situation.
That I just finished working with a family here recently on a situation where that could have happened. Fortunately, we avoided that happening.
Mhm.
There's nothing worse than having paid all this premium into a policy, taking out a fairly substantial loan against the policy, finding out that the policy is about to lapse, and when it lapses, you're going to be in a gain position.
Mhm.
And life insurance does not have the benefit of long-term capital gains rates. It's all ordinary income tax rates.
Right.
So folks get a big surprise sometime when they have no money and they're
Right.
having to pay, 35% tax on a $200,000 gain that they didn't know existed. So that's something I do work with my existing policyholders to help to avoid that income tax implication.
Yeah. So just be aware that that can be an issue, and so don't take it lightly when a policy is going to lapse,
No.
especially when you got one of these cash value loans.
Yeah, it's not too, it would not come up with a term insurance policy, but with a whole life policy, it definitely can come up with a whole life contract. Even some universal life policies it could happen with, but the policy form most likely for that to happen with is the traditional whole life contract.
Okay. So time is going. I want to be sure that we cover these different types, because we've been throwing out these terms.
Terms, yes,
so,
yeah, the
so
jargon,
let's talk
yes.
about some of the different types of life insurance policies that are available, and when they're most appropriate.
Well, there's term insurance, there's whole life insurance, there is universal life, and then there is what's called variable life.
Mm-hmm.
Term insurance is the least costly form of insurance and provides the maximum death benefit. And that would be a great product to use for a young family that has limited resources to pay for insurance, for that business startup company that has limited cash flow but sees the need to have the life insurance. And it can even be the need for, if you know it's a short-term issue, that you need some life insurance because you've got a big debt that's out there and you know that debt's going to be paid off in the next 10 years. So you might want the life insurance for that. Whole life is something that you want to know that will be there at age 100.
Mm-hmm.
You see the long-term need that even after the income replacement years, the life insurance is still going to be necessary. Could be for estate liquidity.
And you have a level premium.
You have a level premium, although if it's a participating policy, which means a dividend is paid with it,
Yeah.
You may find that your premiums actually can go down
Right.
based
right.
on how well the dividend is doing. But the idea of it is, yes, it's a level premium paying contract.
Mm-hmm.
Universal life is kind of a cross in between the two, between term insurance and whole life. That's a simplistic definition. And it keeps the costs not quite as high as the whole life and definitely not as low as the term, but you can have the policy for a longer period of time. And again, it depends on the individual needs of the family or the business. But I would definitely be very active with getting what is called in-force ledgers on universal life contracts. Over time, interest rates change and pure cost of insurance can change, and you just need to be aware of what's going on with your policy. So if you have a universal life policy that you haven't looked at in the last 5 years, I strongly recommend looking at, is that premium still holding that death benefit?
So part of what's going on is that you're um, you're depending on the performance of investments that are being held underneath this policy in order to fund it.
Correct.
And
Correct.
so if the stock market isn't doing very well, or whatever the investments are that are underneath, then sometimes you need to pay more money in order to keep the policy in force.
Right. Now, the whole life contract, the terminology is that the insurance company is managing the investments.
Yes.
And it's usually called a portfolio of investments. And there can be very long-term investments that the insurance company has for
Yes.
those policies.
Mm-hmm.
Universal life is typically more current money, although in today's environment, I do believe insurance companies are helping to fund that that interest rate, because most contracts are having like a guaranteed of 3.5% to 4%. And current money doesn't necessarily offer us that. And the variable life policies are tied to the equity, the stock market.
Okay. So did you want to make maybe any other comments related to these, or when you think that they're appropriate? It seems like there are fads that come in, so like these universal and variable are more recent developments, although now it's 20, 30 years, but
I think if you want a contract for a long-term basis, that definitely whole life has a place. However, I also have had enough experience with whole life that frequently people will not pay the premiums throughout the life of the contract. And that's where we get into this situation that we just talked about, where these loans get accumulating against the policy and the policy could lapse. So I think there's a place for all of it. It's just, as the owner of the policy, you need to be checking it every 2 to 5 years to be sure it's doing what you think it's supposed to be doing.
Okay. Have you ever had a death benefit denied?
No, I've never had a death benefit denied.
Thank goodness.
Yeah, because typically that would happen in the first 2 policy years. It's called the contestability period, and that's when the insurance company can go back and re-underwrite the case, go back and look at all the medical evidence and so forth, and see if there was something that was not disclosed to them at that time. I have had cases that were re-underwritten because people have died in the contestability period, but nothing was ever turned up, that there was no cause not to pay the death benefit. I have had a situation, I actually should say my father had a situation. My father was a life insurance agent for years and years, and it was around the holiday time back in the mid-70s, and he was working with a high net worth client at the time who told him it was Christmas Eve, and he said, I want you to come back after the holiday and I'll give you the check and the policy will be in place.
Uh-oh.
Well, this is a true story. This
Okay.
stuck with me for a long time when I
Yes.
first started working with life insurance and getting premiums, getting people to pay premiums.
Yes.
He took a motorcycle ride Christmas Eve night and he was killed.
Yeah.
And everything was sitting on his desk. The check was even written out without his signature on it,
Yeah.
just sitting there waiting to do
Yeah.
this. So that to me was a real message, like, it helped people understand you don't want to procrastinate on this.
Yeah.
So that wasn't necessarily a death benefit denied, but it was a death benefit unpaid
Right.
because the process never came to completion.
Right. But it does point out something, and that is, when you apply for a policy, it's usually a good idea to go ahead and include a check with.
Do a binding on it, up to the
Yeah.
amount the insurance company will let you bind it. Because there's rules and regulations around that, but at least there could have been something.
Yeah.
Yeah.
I heard a case, this is good old Frank Betcher's books of a life insurance agent from a long time ago. And he was talking about, he had a situation where he had taken some applications. It was really for a corporate buy-sell. And anyway, he had come in to deliver the policies, and then he said, well, where's Mr. Jones? He said, well, Mr. Jones is kind of sick. He's has pneumonia. And he says, oh, crap.
Yeah. Yeah.
And he says, well, what's the problem? Well, now that I know this, now we're going to have to get him requalified for his
Right.
policy.
Right.
And he said, well, was there anything you could have done? He said, well, if if I had gotten a check with the application,
Correct.
then once the company had approved the policy, then they couldn't back out.
Right.
And they said, well, why didn't you ask for the check?
Truly a learning experience,
Yeah.
Sometimes these learning experiences are very painful.
Okay. So here's a question that some people might think about, because they worry an awful lot about sometimes maybe how much the premiums are going to pay and so forth. Have you ever had a beneficiary ask how much was paid for premiums?
Actually, I haven't. I have not had a beneficiary ask me that. How much did my parents put into this policy, or how much did my partner put into this policy? Usually what I have found is that when they know they are the beneficiary, especially children that may not even be aware that the contract's there, they just would like to have the money as soon as possible.
Yeah. I mean, a lot of times people just desperately need these benefits.
Oh, absolutely, especially young families.
Yeah.
Especially.
Right. I'm not quite sure. I think we're at about the last. Oh, there we go. Last minute. Well, I think we're just going to have to go ahead and wind it up. I was afraid of that. Time goes awfully fast.
It does.
But at least we hit some basics. Peggy, so I want to thank you so much for being my guest today and coming and sharing some of your experience and thoughts related to life insurance. And hopefully we'll be seeing you again soon. I know you and I will be.
Well, thank you for having me here today, Mike.
Okay, it's a pleasure. Folks, I hope we've given you some things to think about. This is just an introduction really to a complicated topic. And so you do want to be dealing with a good life insurance person, but it should be part of a team involving an attorney. We like to think of CPA and so forth. So you have heads coming together to come up with the right result for you. We'll see you next time on Financial Insider Weekly.